Hello everyone, welcome to the basics of stock market. Today I'm going to teach you about the first step for the investments. Many of you have not understood how to start it, how to start the investment journey. Okay, today I'm going to teach you about entire concepts of investments and watch this video till the end. Okay, so what is the first step to start the investment journey? The first step is to open the demat and trading account. So that is a very important process. Okay, once you start and open the demat and trading account, you can start investing. But what are the options are available for the investments? What are the instruments are available for the investments? So let us understand one by one in detail. So the first instrument which is available for the all the investors is mutual funds. So many people think that mutual fund investments is the right way. So you can start your journey, the investments in mutual funds. There are two types of investments are available in mutual funds. One is equity mutual funds and one more is debt mutual funds. Okay, so the first equity mutual funds is there are a lot of mutual fund companies are there where you can select the equity related mutual funds and start investing. In case if you do not want to take any risk or not much risk, so you can go for a debt mutual funds. Okay, so mutual funds, I think I don't want to give you much detail. Many of you are already know about how the mutual fund works. Okay, so please, before selecting your mutual funds, identify which are the best performing mutual funds and how safe it is, and please check it out. And I will give you a brief introduction in my later videos, and you can understand more on mutual funds later. Okay, the second is IPOs. Many people think that they do not know how to apply it. So first step, you can start with IPOs, where there are a lot of good IPOs will be coming. So you can go for applying for those IPOs. IPOs means initial public offer, where the companies are issuing shares to the public for the first time. Okay, so they are called as IPOs. Once they have issued the shares to the public, then they list in the exchanges in India. Let us take example. In India there are two exchanges. One is NSE, one more is BSE. There are two exchanges in India. So you have these IPOs. Once it is issued, later the companies will be listed in these two exchanges. They are major exchanges in India. NSE and BSE, anybody can do buying and selling. That is, the market is called as secondary market. So this is a primary market, and once it listed in the NSE and BSE, there the trading starts, and that is called as secondary market. Okay, so the first basic step, that is, I told you, it is equity. Equity is nothing but you are getting the ownership in the business. Okay, so and the product of later comes is the derivatives. In derivatives you have two options. One is futures, one more is options. And then comes the commodity market, where you can invest in many commodities like gold, silver, copper, zinc, aluminum, crude oil, natural gas. So various commodities are available for the investment as well as trading. Okay, so the major exchange is MCX, so and one more is NCDX in commodities. Then comes the currency market. Okay, so each one understand in detail, step by step process. These are the major instruments for the investments. Okay friends, so let's take an example. And also I told you there are two exchanges. One is NSE and one more is BSE. This is Bombay Stock Exchange, BSE, and NSE is National Stock Exchange. There are two major indices are there in each. One is Sensex. In Sensex there are 30 companies are accumulated, and in NSE Nifty there are 50 companies. See, you should know. Let us take, this is an example of, I can give you in terms of basket. Okay, so Nifty is accumulated of 50 companies in the basket, where each companies we can call it as a flowers. Okay, so this is the how it works. Okay, 50 companies, any point of time the NSE thinks that the companies are not performing in terms of volume, so they can remove the stock and add new stock. Okay, that is how the Nifty index it is priced. So it is priced at 9,914 as on the date which I have captured. Okay, so these are the two exchanges as we discussed. Let us take example. Many people think equity investments, right? So let's understand what are the sectors are available. There are various sectors are available for the investments. Okay, let us take example cement sector. In cement you have ACC cement. What is the price of ACC? It is 1239 rupees. So there are various sectors like this, like power, pharma, auto, gas. So various banking sector, telecom sector, pharmaceuticals. So various sectors are available for the investments. These are called as sectors and these are the stocks. And here there is a per share price. Okay, you can buy any number of quantities. In equity you have an option that you can buy any number of quantities, like 1 also you can buy, 10 also you can buy, 1000 also you can buy. So it is depends on your financial planning. You can start investing. So there is no restriction that you should buy minimum this much quantity only, but when you want to go for buying, minimum quantity is one quantity you can buy. So hope you understood the equity investments. When you invest in individual stocks, like let us take example, say Asian Paint, you invested, you bought 1 share or 10 shares, you got a ownership in the business. So you are the shareholder of the company. Okay, so this is the basic about investment, friends. Okay, let us understand in detail. Many of you may be thinking investment in stock market is risky, correct? But I want to tell you something. Whenever you find a taking loan from this company, have you thought this company risk appetite? No, right? So people will buy a loan from this company but they never think of investing in this company, correct? Let us take example, say somebody who invested in this stock at 2009. The share price was trading at 218 rupees. Okay, so in the over a period of time, in the long run, the stock price went up in 2019 almost 2400 rupees. Okay, but you have continuously you are paying home loan of yours, but you never imagined and never thought of investing in such a companies. Okay, it's always a good. Let us take one more example where many people think whenever they want to construct a house. Okay, so they use a quality cement, right? So you think ACC is the best cement and you think Ultratech cement is the best cement, right? But how many of the people who use the company's products have invested in the company? Very, very less. See, this is how you should understand the investment pattern. See, the share price was trading in 2009. It was 384 rupees, and currently it went up almost 1800, and now it has come down to little bit of 1000, almost 1300 rupees. Okay, let us take one more example. What I said is Ultratech cement, which was trading at 260 rupees. 260 rupees price almost went up to 4900 rupees, but you used to for your constructing your house Ultratech cement, but you never invested in Ultratech cement company. Okay, so I can give you example of one more which you like to drive this vehicle. Okay, many of them are having these vehicles, and also I've seen, okay, uh, the investment amount in 2009 was around just it is a 310 rupees. Why I'm telling you Maruti Suzuki is because they are having a major stake, their sales, highest sales, and the entire in India, the 50% of the sales happens from Maruti Suzuki. Okay, so this is the market cap of Maruti Suzuki what they are holding. Okay, this is the share price from 310, it reached to 9980 rupees. Let us take example. I'm just giving you an idea. In case instead of buying a vehicle worth 4 lakh rupees in 2009, if you could have invested 4 lakh rupees in Maruti Suzuki at this price, you could have bought around 1200 shares. So that 1200 shares over a period of time, the value of that stock, if you could have exited exactly at 9,000 rupees also, the returns could have been almost 1 crore. The 4 lakh rupees investment in vehicle, you're getting 1 crore. What happened to your value of the car? Has depreciated, correct? 4 lakh rupees value has come down to 2 lakh rupees. This is the advantage of investing, and many of them don't bother to invest also. Okay, so let us take one more example I can give you. You all know the share price from 10 rupees went up to 800 rupees. Which is the stock? In 2011, you might have known about the World Cup, right? Which Dhoni won actually. Okay, when he was in the captainship. So when he became ambassador for the TVS Motors in 2011, that time the stock price started going up. But unfortunately, the product was not so good and they underperformed in the market. But meanwhile, later it recovered very well, and later the new vehicle they launched by, again, the brand ambassador was almost, you all know, there's a big B who is Amitabh Bachchan. So who started the advertisement, and sales started going upper side and vehicle was also good. As the sales went up, the share price also went up. This is how it works. This is what the fundamental analysis is all about. I will give one more example like this. You know, the share price was in 2009 was 10 rupees and the stock price went up to 2600 rupees. Okay, and many of you all may be owning it in your house. Okay, one of these products, no doubt at all, as Whirlpool has performed so good and the business was also so good and the share price also went up in a good way. Okay, but you had product of Whirlpool in your house, but you never thought of imagining investing in that particular stock. Whenever you travel, recently listed company I can say, okay, so Varun Beverage, okay, so maybe I don't know whether how many of you are known about those products, but the share price in 2016 was just 250 rupees. Just in 2017, share price was 250 rupees. It went out till 899 rupees. Even they have given one time bonus, means 1 is to 2. That means you have, for for 2 shares they are given 1 share bonus. Okay, this is called as bonus. Okay, the share price currently it is trading at 618 rupees. How many of you drink when you go out? Many of you, right? So but you miss the opportunity of investing in such a companies. Okay, it's always good to invest for the long term. I'm telling you these all examples to understand you, make you sure that never ever scared of investing in stock market, because the products are good, definitely the stock will perform. How many of you know this company? I don't know. The share price was almost 50 rupees in 2009. It was trading quite many days, but once the started price moving upper side, you all know this is the product. This is Radico. Okay, so best products they have, and the sales started going up, doing well in the business. So many problems came, but still stock is performing because this company does not need any advertisements. One more such company I can tell you, which was 65 rupees. The share price went up almost 1482. You all know this, right? Many people don't like it, but few people like it. But see the price, 65 rupees. I think don't know of the beer price. It was long time back how much it was, but how much it went up. Every beer we have drank, you could have bought one share of this. You could have made a good real money. Okay, so this is how you missed the opportunity of investing in stock market. Nevertheless, start as early as possible. This is always a good to understand the basics of investments. So it's very simple. Understand. I know many of you think the understanding the balance sheet is very difficult, but can you understand what are the products they are dealing with? This is how you can make a higher returns out of your investments. You all may be knowing only when the price is low you can buy and when the price goes high you can sell. Sometimes even in intraday basis, okay, you can sell it. When the price goes down you can buy it back. So you can make money in both the directions in stock market. If you think that the price is going to go down, sell it first. If it goes down, buy it back. So there is an option in derivatives also where you can sell it at high price. When the price goes down you buy it back. That is in derivatives. You can keep number of days where there will be contracts. I will not be explaining right now much about derivatives. Later I will explain you how the derivatives has to be invested, how to manage your wealth. Okay, so think of this. You can make money in both the directions, buy and sell, sell and buy, both the directions. This is very, very important. Okay, and what are the trading outcomes many people face in the market? So let us take example. Many of you think that whenever you sell, what happens to the price? Price will go up. Many people think, let me buy. So when they buy it, what happens to the price? Price will go down. What you say? Oh, my luck is not good. This is not the way, friends. Okay, so always whenever you think that the price is going to go up, what you will do? You will exit with a small profits. Instead of exiting in a small loss, what you will do? You will keep on holding it to the larger losses. So this you should change it when you want to start investing or start trading in the market. So let us take example. So whenever you think that the large profit you should always book. In case if you are not able to book a larger profits, at least you should book a smaller profit. In case if you are not able to book even a small profit, at least you should exit at the break even. Sometimes many people will not be able to exit because of the fear at break even point. Okay, so at least you should exit with a smaller loss. So when you want to exit with a smaller loss, avoid the larger loss. Okay, so one thing is clear, whenever there is the larger profit you expect, you book always. In case if you are not able to book a large profit, exit with a small profit. Even in case if you are not able to exit with a small profit, at least you can make it break even point. When the trend is going against you, when the stock is going against you, you should always have a break even. Even if you are not able to exit at a break even, even if it is a small loss, you should exit. So this is the mantra for the trading as well as investment. So, and also I want you to explain you more on derivatives. So maybe you may be thinking there is one more investment instruments available for everybody. So understand before investing what are derivatives. So derivatives, in derivatives there are two options. One is futures, one more is options. Derivative means it is a derived from the underlying asset. Okay, so in that you have two options, that is futures and options. In options again you get two options, that is one is call option, one more is put option. So hope you all understood about the basics of stock market, and derivatives I'm going to explain you in my next video. Please watch this video completely. If you are not understood, watch it again, and also wait for my next video. Thank you so much. Have a wonderful day.